February 15th, 2023. This is the S&P 500 E-mini 2000 tick chart on the Thinkorswim platform. I'm going to try to rush through all my trades today because I notice my video is getting longer and longer, which I know a lot of people don't want to watch. But you can also just go to the descriptions and look at the timestamps and the time of day where I actually took my trades and other points of interest. So there was really only one catalyst, one or two catalysts today, which was the Empire State Manufacturing Index and the retail sales, as well as the core retail sales stuff. And it happened around 5:30 Pacific Standard Time, which is right around here. And this is the chart that I saw today. It's kind of in a big trading range with a bullish bias. So this is how I had my chart drawn up. Now, here's all my trades that I took. Instead of going through each trade and showing you where I entered, this is just pretty much where it is. I'm going to go ahead and turn these off so you can see how I drew my chart. So I took 18 trades today, which is over trading for sure. I had 14 wins and 4 losses. And this is the big trading range that I saw early on. And then I saw these measured moves, which are these yellow arrows, which are only acting as guides for me to know when a trade is probably about to wear out or when a reversal might be occurring. Now, they don't dictate when a trade should be taking place. They're just kind of guidelines. The blue ones are my trades, so there's 18 of them out there. The red ones are just other trades that I saw. I didn't take them for one reason or another. And let's get into it. Remember, you can just go to the description to look at the actual trades and points of interest. So I'm going to try to rush through this to make the video shorter. So this is actually an intermediate, smaller trading range that I originally drew because it touched the bottom I liked and it touched the top here again with this overshoot. Prices started to move. Now, the first thing that I saw was potentially this second entry long, but I didn't want to take it because it was still early in the day. It's only about 10 minutes in, and I wasn't just prepared to take this trade at the moment. So, however, I do see this trade coming up. Now, this trade I saw first entry long, new high, first entry long, second entry long. I took this trade because I thought it was a pretty decent signal bar, closed above the EMA. But unfortunately, I got stopped out early because when I entered my trade, I forgot to move my stop to one tick below here, so the trade would have worked out. However, 2 minutes later, I re-entered this trade because I felt the setup was still pretty good. The EMA was holding. So I re-entered the trade again right here. And this turned out to be a green trade because I thought the opportunity was still available. And the signal bar, even though it closed red, kind of a red, but it was a bullish red bar. And it closed above the EMA, so I took the trade and it turned out to be green. So this is my second trade of the day. So prices continue moving. It's respecting the top of this trend line. It comes down. I take my third trade of the day here. Now I see a new high. I see a first entry long here, a second entry long here, right? However, I counted this all as part of one move. So I just said, okay, it's first entry long and watching for this to create a second entry long, which it did. So I took the trade right there. I was able to scalp out. And then here, if you didn't take this trade, you could definitely have taken this trade because this is a new low, first entry short, and then there's a second entry short coming up, but it's going to fail because the second entry short does tick one tick below. It looks like it was a trap for a lot of shorts, and also made a higher low of the second entry long because the first long you get is right here. And you get a second long, but I counted this as one big move, one leg down, up, and so there's a second entry long on the visual, and there's a higher low here. So that was definitely a trade that could have been taken, but I wasn't ready. I think it was trapped as shorts. So going up, it's oscillating. I just wait and sit on my hands, and then coming up to about, breaks down below this part of the trading range, which was this big one, because I did draw this big one here, touching the bottom here, the extreme, as well as the top of the extreme. But in between, I also drew this intermediate overlapping trading range. And so that was just more as a guidance to see, because the smaller one probably is in play earlier than the bigger one. Prices continue moving, and then here I see a possible second entry short visual, because if you count it as a strict count, this would be the new low. It'd be a first entry short. Technically, you have a second entry short right here, and then maybe a third entry and a fourth entry. But I saw it as one clean leg, which is this arrow. So it's one leg, first entry short, then followed by a second clean leg right here. And it touches a measure move, and it creates a break here, visual second entry short. So I waited for this one to close, then I entered on this one. And fortunately, I was able to scalp out with a green trade because as you see, it breaks down, it goes below the EMA. And then here I saw a potential second entry long. But I thought it was a hidden one. It was aggressive because I said this is a new high. Saw first entry long, definitely first entry long here, right? And then I considered a potential second entry long here. Now, the reason I saw this second entry long is a little bit like aggressive because it did try to make two pushes up. So here it is, like first try to push up once, then it may try to second push up, and it's holding on the EMA. So I took that entry. Granted, it is aggressive, but it turned out to work, and I was able to scalp out pretty quickly. But if you wanted to do a more deliberate count, it would have been a new high, first entry long. It's coming up here. Now here I'd be watching and waiting, and I marked it after the fact. But here was my second entry, or my entry on a second entry long that was very more deliberate. It turned out to be trade number 6, and it was also a green trade. So far I had like one red trade, which is the very beginning of the day, and 5 green trades, which is not too bad. Then prices continue moving, just chopping sideways. It's within this trading range right now because I kind of drew this double bottom here. I also like this entry. I also like this trade, second entry, because it bounced off and created a double bottom. And I had closed, even though it closed below the EMA, I had my order slightly ready above here just to take it in case it swept up and there was enough room to get to the top of the trading range. Granted, I thought it was a little bit better than this one because this one was an interpretation of this hidden second entry long. Prices continue chopping around. And then we come up all the way down. It's below the EMA. At this point, I draw this trend line because I see kind of good confirmation here. And up here, I wasn't too sure because the top wasn't confirming that many times. I did have it a little bit lower, but I dragged it up later. But at least the bottom was holding because that's the more important one because I'm trying to take bounces off because I'm trying to go long. Prices continue chopping around, breaks below. So I have a competing narrative of this trading range and also this trend channel. So I don't know which one's going to dominate. Should I be doing it using trading range rules or second entry rules? Kind of goes up, chops around. This is coming up where I take my next trade. So I consider this 4 touches as one high. So it'd be a first entry long and a second entry long. Now this second entry long, I like this candle because it's very bullish. It also closed above the EMA. And so I thought, okay, this is a pretty good trading range as well because it's touching here and I kind of drew this down here. I also had it up to here at one point and thinking it might be a break back in because when it was up here, it was closing right where the trading range would have been. So I took that entry on a hunch, thinking like, okay, well, it is bouncing off the bottom of this trading range if I had it down here or entering this trading range because most of the time when prices break out of a trading range, it goes right back in. Turned out to be a pretty decent trade. I mean, not a decent trade, but at least a green trade. And then that was my 7th trade. So this is the 8th trade coming up. This failed second entry long because as this counting as a new high, this first entry long, second entry long. And when it made this new high, it immediately broke down, right? So I thought, okay, well, obviously that's a failure. However, I didn't take into account at the time that this is kind of running into this potential trading range because when it violated, or actually was here, I had a preliminary smaller just line here, just to 2 chances of 2 potential trading ranges because it could have been from here down to here, or it could have been from here down to here. And I didn't know at the time. This one I ended up deleting, but that was what I was using earlier on just to see if potentially, this one was more valid. It turns out to be more valid. It comes down to the bottom, and I didn't think about it at the time, but when I saw the second entry failed second entry long, I said, okay, well, obviously it's going to go back down, but you have to keep in mind that overall trend right now is bullish. It's kind of a bullish bias. So it was premature and it ended up being a red trade. So that was my 8th trade. It stopped me out when I had my stop down here and it went right back up. And then here I see a failed second entry short. So right here is a new low, first entry short, comes up. Now I did have to interpret this a little bit because this is kind of a hidden second entry short. It's aggressive because I thought, okay, well, it could break through the top of the EMA. And it more likely didn't really form a second entry short. Otherwise, you would think, well, maybe it's enough room to get, well, it's actually there's not enough room. Because if it's a second entry short, you'd be suspicious because the EMA is coming up. But since it technically failed on when it broke up above this, it was a little aggressive. I had my entry 1 tick above these 4 touches. Well, actually, I guess if you count it, it'd be 5 touches. And I got scooped up, which was fortunate because it's kind of an aggressive trade and the prices continue moving up. I didn't get a runner because it kind of stopped me out right there on this candle. And I just kind of sat on my hands again and watched prices continue. Prices continue chopping around. Now I see a second entry long hidden. So as you can tell, I over traded today for sure because I'm just trying to I'm just trying to see if I can interpret some trades earlier. I mean, it's just learning experience. Certainly it wasn't, I don't recommend it, but it was something I want to try today. So I had a first entry long, and I saw this as a potential second entry long hidden. It closed right below the EMA, but I thought, okay, well, it's respecting this trend channel, and for the most part, it is bouncing right back off, and I'm thinking it could move right back to the top. So I took an entry. It ended up being a pretty decent trade. I was able to chase my runner up, and my runner got stopped out, I think on, if I recall correctly, it was on one of these guys right up here. So prices continued going up. EMA is kind of holding. I do see a potential failed second entry short. Excuse me, failed second entry long, because if you count this as a new high, first entry long, second entry long, failure. I wasn't prepared at the time because I don't think I was paying attention to see that, hey, this is a signal bar. This is a okay signal bar, but it doesn't break above the EMA. It comes flying right back down. So that was a potential trade, but I didn't take it. Prices continue moving. You can ignore that yellow arrow. So I do see a second entry long here, because if this is a new high, it'd be first entry long. And then right here, I'm getting ready to potentially see a second entry long. However, when I took this trade, it was quite foolish because I had my entry right here to see if I'd run it back to the EMA. However, it's already too far from the EMA. This isn't a very strong setup, so this trade actually shouldn't have happened because there was nothing really there. Should have waited for the trigger bar to close. And as you can see, if I had waited for this entry bar to close, it would have shown me that this was not a good trade. And unfortunately, I got stopped out. So that was kind of a jump the gun trade. Prices continue moving. So I do see a second entry long hidden because I counted this as a new high. First entry long pulls back, second entry long. So when I saw this triple test here, this triple touch, I thought, okay, well, I'm going to put an entry right up here. Again, it was similar to this one. It's aggressive because it's hidden. And also it's aggressive because right now EMA has been going downwards. It's proven that it's kind of rejecting some prices. So I put a hunch trade here and it turned out working. But granted, this trade here is not like something, it's not the best, even though I thought there was enough room to scalp out. And I thought I just like the close of this candle because I had to interpret it as a second entry long hidden, but I did like the signal bar being this big bullish bar. So I thought there was enough room to flash up and take me with it. So I was able to get it, and the runner got stopped out pretty much close to break even because this bar came flashing back down. And then prices continue to move. Here I saw a second entry long. Now this is kind of very tightly, because if you counted this as a double top, then it's only a first entry long, but I counted individually. So the first entry long here, breaks out, closes outside, the second entry long here. And I like that it touched 4 times there. So I put my entry 1 tick above. So this is a kind of like a hunch slash a little bit of a risky trade. It's aggressive because it's at the top of the trading range. And even though it touched 4 times previously, I put my entry 1 tick above at 41.3550, which is right here. I was able to flash it through, and then my runner got stopped out pretty quickly. So no runner, but at least I got a quick scalp off of it. And then there's another failed second entry short, because if you count this as a new low, it'd be a first entry short and a second entry short, and it's continuing down. And now this bar, not only does it go down below, it goes back above, and it encompasses and closes out these 2 previous bars. So I thought that's a pretty strong indication. So I went ahead and took a entry a little bit lower above this candle, also right where this top of the trading range is, which makes it kind of a little sketchy. And I was able to scalp out, which was lucky. And then prices continue moving down. There was a lower high here, because if you count this as a first entry short and a second entry short, there's lower high confirmation. Prices are going to go back down. So you could have taken a trade here. However, you're running into the EMA, and it's a battle between the EMA and the top of the trading range. So it'd be kind of on you to decide if it's going to bounce off the EMA or if the trading range is going to hold. So I certainly didn't take this trade because I didn't think there was enough room here to take it. Even if you stuck it back here right after this, you have to take it on the engulfing while this is still forming. And I didn't like that. So there's also see a second entry long. I like this trade actually because there was 2 clean moves down. New high, first entry long, second entry long. It's a very good bullish bar, closes at the high. I took that entry and I was able to get a runner on it, and it closed, and it got chopped out on the runner on this candle here. but it was still a pretty decent setup, decent trade. I like that one. That was trade number 16. This is trade number 17. Yeah, there's a lot of trades today for sure. So this is a new low. I just saw first entry short, second entry short, and this is second entry short formed here. And as soon as it broke above, I saw it as a failure. It's running in top of this trading range. So it was a little risky, but I put it one tick above, thinking that, okay, well, I'm probably going to get scooped up. And ideally, I do get scooped up, but then all my runner got stopped out. So it was enough for a scalp, but it was a very risky because this isn't a very good signal bar. This isn't that great a signal bar either. I mean, all these are just kind of doji, so this is certainly a higher risk trade. Probably should have been avoided. So if I had avoided it, it wouldn't have been that many trades today, which is, good. Now this is a kind of a gamble trade. This trade should not have happened because there's no setup at all. What I saw was I had this trend channel going up, and I thought, okay, well, this trend channel is kind of being respected on both ends. And when it came down, I thought, okay, it's kind of playing with this top of this trading range. And I thought, okay, well, I'm just going to take a trade here. Now, that's not a good enough reason to take a trade, but that's what I did because I had such a positive winning streak today with so many wins. But that is no reason to take a reckless trade. And I took it one tick above this one because I thought it's just going to keep going. It's going to make a new high because the respecting EMA hasn't come down. Trend is strong. I'm going to take here. But I have to remind myself in hindsight that this is in a big trading range. And it got stopped out up here. So there's no proof, no real indication there's a strong trend to have taken this gamble trade. So it was a poor gamble that unfortunately, a poor gamble that rewarded me, but it was just kind of a bad habit that I know would be planted because I'd probably see something like that again and take the trade, and next time it burned me. So definitely just something to think about. And then I didn't take any more trades for the rest of the day. And then the market just kind of runs into the close. I do see a second entry long here, but I was just kind of was a little spent on how many trades I took. I decided I shouldn't take any more trades because it was a clean leg down, a second clean leg down. Now this trade is a possible trade because it has, it's kind of breaking back. It made one push, second push, or right here, you don't know that it's making a second push, but it's getting ready to make a second push. The signal bar is pretty decent. It's closing right at the EMA. And so certainly it would have been worth a shot because this candle is actually pretty small. This candle is only about 1.5 ticks, 1.5 points, about 6 ticks. So it would have been worth it just to try it. And it turns out it would have worked. And if you had a runner, you wouldn't have gotten stopped out yet or if you're going for a higher profit target, you wouldn't have got stopped out until a little bit later. So certainly up here, there's a few points for here to have try to get out of this. And it already made a new high. So when you see this push up, I don't think you'd be too ambitious in thinking it's just going to keep running away. So you would have gotten a scalp or at least some kind of profit target. And then prices just kind of continued down, continued chopping around. And I didn't take any more trades and just kind of went into the close. So that's how I saw it. I know I rushed through it, but that's kind of how I want to do it from now on, just so it doesn't create a video that's excessively long. So even with 18 trades, several of them I shouldn't have taken at all because they were just not the cleanest setup. So I'll learn from them. Hopefully this helps. And the descriptions of all the trades are below.